Our next guest, though, has a new prognosis for 2024 with some top picks for your portfolio. Mohit Bansal, Wells Fargo biotech and pharma analyst, joins us. Mohit, 2024 overall going to be better for healthcare, you think?
So this is going to be very interesting. If you think that the market is going for safety and people are looking for safety, I think healthcare is going to do well. But if it is normal market, we think the growthy biotech name could do better in our sector. That's the call we are making.
Okay, let's talk about some specific names then. What do you like? AbbVie?
AbbVie is our topic, yes.
Why?
So this is a story where it trades more like a value stock, but this company has a key product going away next year, and after that we can see a lot of growth. So patent cliff part would be gone, and they have a lot of growth products, and the company has also done a couple of M&A deals in last couple of weeks, which should solve for long-term pipeline issues for the company.
And Vertex promising because of some acute pain trials in part?
Right, so they released chronic pain or diabetic peripheral neuropathy data this week, and that is the key reason why this stock could do well.
What about Eli Lilly? A lot of hopes around weight loss drugs, but that's not the whole story.
Sorry, I cannot hear you.
It's asking about Eli Lilly, if you can hear me now, and I know there's a lot of hopes around weight loss drugs, but maybe that's not the whole story.
You're talking about Lilly, right? So Lilly has a lot of pipeline, and then beyond the weight loss drug, the company has done some savvy deals. So weight loss is definitely the reason. And then beyond that, the company has developed a lot of pipeline, and they have a lot of. This is a company which spends heavily on R&D. So this company can have a long-term pipeline that could pay dividend in the future.
And what do you like about Regeneron?
So Regeneron is another company where they have solved the patent cliff problem with their Eylea franchise. So now they have high-dose Eylea that could convert a lot of Eylea business. And then they have this product called Dupixent that recently or earlier this year released data for COPD. And this could be a big $20+ billion drug in long term, which they and Sanofi sell together.
What are the biggest risks across all of these that investors should think about? Because, I mean, a lot of these names can move violently.
Right. So again, pipeline risk is always there. While investing in biotech, the most important risk is to keep in mind that these trials could fail. In these particular situations, probably pipeline is not as big a risk because a lot of the data has already read out, and it is the launches. Some of the value names we kind of trying to avoid. They could become value trap, and that's why if the market is not going for safety next year, we would be avoiding those names.
What about the names that have kind of reversed post-pandemic in a way that reminds me of what some e-commerce related stocks or even video conferencing, Zoom, did in the tech landscape, but they rebounded somewhat? Do you expect some rebounds in those names? At what point do you hunt for value?
So if you're talking about Pfizer, I mean, Pfizer is one name where they benefited from the pandemic. Then after that, vaccine sales are dwindling down, and because of that, you are seeing some weakness. And Pfizer is the worst performing stock of the year. We think this stock could be challenging for next couple of years. The reason being they have some new launches coming, but Street is still not sold on that. So this is more of a show me story that will take time to evolve over time.